for one for Asia.
Cheers.
Cheers.
If it seems things are moving too fast, you need news as it breaks to stay ahead. Dow Jones Newswires provides real-time financial news vital for today's businesses.
Huge gains.
You get access to that comprehensive coverage through CNBC's exclusive partnership with Dow Jones Newswires.
The dollar is still rebounding both against the euro
and get the news as it breaks.
The dollar is higher against the major currencies.
For definitive.
Welcome back to Squawk Box, everyone. Shares of China's largest property insurer, PICC, soared 50% on its trading debut yesterday, and that is boding well for upcoming IPO issues, also by insurance companies. Let's get a preview right now with Bernie Low over in Hong Kong. Bernie.
Bettina, it's kind of harkening back to the early 90s when China's stock market experiment boomed and really hit a big crescendo with everybody kind of focusing on the potential in what can be and will be the world's biggest consumer market. We've got another big insurance behemoth ready to debut fairly soon here, and it's going to dwarf what we saw launch in the Hong Kong market yesterday. The company in question, China Life Insurance, the largest life underwriter, planning an overseas stock listing here in Hong Kong and in New York sometime before Christmas, probably about the middle of December or so. Expected to report a 20% jump in net earnings this year, say sources close to the company. Company now forecasting 5.4 billion renminbi, up from a pro forma 4.5 billion last year. And this is going to be a 2 to 3 billion US dollar IPO, which is going to dwarf the already huge IPO we saw in the market yesterday. It was worth 700 million US dollars. It was the biggest IPO of the year thus far here in Hong Kong, and that was PICC Property and Casualty Company, which rocketed 50% on its launch and ended the first debut trading day at 270 against an issue price which was already at the highest end of its indicative range at $1.80. Now, some people are kind of mulling over, is PICC overvalued? Has this been overhyped and overpunted? Some people say yes. Witness, for instance, that Morgan Stanley, one of the listing sponsors, had a price target themselves of just $250 for PICC. They're supposed to be very close to the company since they helped underwrite the deal, and yet the stock at $270 on a earnings multiple basis. This company, which at $1.80 was pitched about 14.5 times earnings, is now pretty much on par with U.S. and Australian insurance companies, and the current value at almost 2 times breakup or 2 times book value. Well, the question is this overdone or not? And there are some shots in the PIC launch yesterday. Remember that AIG is taking a 10% stake in the company and a sign of growing cooperation in the financial industry between America and China. They hold about 70% market share in China, PICC. You know, other people are muscling in on their space, but the chief of the company says, hey, we're big, and we're going to be big for a long time.
We estimate that by 2007, we will still have more than 60% market share in China P&C market. We are still going to be a leading market player. Although our market share will decrease every year, however, our business volume will still grow.
And in a company where, you know, their market share may get whittled away as time goes by other players, both foreign, as WTO kind of rolls ahead, as well as domestic insurance companies, why would a company like American International Group want to take a 10% stake? Well, the head of the company, who was also at the launch yesterday, Hank Greenberg, said it's not just the volume that we're looking at, it's the quality of earnings.
Market share in a risk business is a dumb strategy, okay? We don't look for market share. What we look for is to try to achieve an underwriting profit in our business, because that's how best we can serve not only our shareholders, but the market.
Okay, market share in a risk business is a dumb strategy, okay? Hank, never a man to mince words. Joining us in Hong Kong this morning, Philip Chan is Research Director at Shenwan Securities. Philip, you heard the words from both gentlemen there. First of all, what's your reaction? I mean, Morgan said 250, the market said 270. Is PICC overhyped? Are IPOs related to China overhyped?
No, I mean, you know, this is obviously, you know, it's a landmark listing because it's an insurance company. It's probably a little bit overhyped in the short term, but you can't sort of look at, say, the initial period of trading as indicative of what's going to go on in the future. It's going to settle down at some sort of valuation on a longer term basis, probably in the next say 6 months, because it's going to be affected by the new listings coming up, as you say. So I think that it's not going to be settled. The valuation is not going to be settled for some time.
Do the macro economics in China concern you right now? I mean, there are more. The whispers are getting louder and louder that they do have an inflation problem on their hands. I know the official data is showing just a fractional clip at which prices are rising. I think it's, what, 0.7% or something like that. But a lot of people are viewing that with a bit of a jaundiced eye, saying that, you know, the state of China, the way a lot of supply is monopolized by state-related agencies and all that, could be artificially keeping a lid on that, and that China actually does have a bit of a bubble forming in some sectors of the economy, and there could be trouble ahead. Do you agree?
There could be some trouble in some areas. I mean, but we're seeing that the government is actually trying to move on that already. They're trying to tighten credit, and they've been, you know, they raised the reserve requirements of the banks a month or so ago. They are likely to do that again in the short term. So basically, they're trying a more softly approach to calm things down. But it's not across the board. I don't think that the overheating is across the board.
Philip, it's Bettina here, along with Bernie. If I can just come back to what Bernie was saying, whether interest in China IPOs might be waning just as a result of looking at Morgan's own target price there. I mean, you would have to look at it by sector, wouldn't you? Because if you just look at the response to the Yangtze Electric Power offering yesterday, that was phenomenal. And what we have seen so far in the energy sector suggests that investors are still very much interested here.
Yeah, you see, you've got a it's not a unique situation at this moment. You've got very high interest in China returning, and liquidity is very strong. As Bernie said before, it's a little bit like the early 90s. The difference here is that structurally China is more solid. We're on more solid ground. Inflation was very high at that time in the early 90s, and we've had 10 years of growth, and we've had a couple of bad cycles in the Chinese economy for the companies. So as we're going into this new phase of investment, it's that there will be tinges of hot money coming in, but then the spread of companies and that are coming out, the range of companies that are coming out in diversified industries, I think it will provide a more solid base for investors.
While China is a very different animal than it was 10 years ago, Philip, the fact does remain that the banking system is still rusted, and the level of non-performing loans, the sour loans in the system, and I realize the Chinese and everybody outside has a totally different idea about what the extent of the bad loans are. The bad loans, the total aggregate NPLs in China are bigger than the GDPs of most countries around the world. Is this going to be the biggest linchpin or the biggest swing factor, how they actually deal with this?
No, you see, they can't deal with this, what I mean is they can't deal with it overnight. This is something which is going to be staged over many years, the next decade, if you like, because there are many ways they're going to tackle it. Things like selling off state shares, which hasn't been started in any significant way yet, and they've created these asset management companies which have hived off some of the loans and to bundle them to sell off to foreign investors. It's going to be a slow process. That's basically it.
Philip, there is some suggestion that where the banks are concerned, simply because management of the banks is so much subject to interference, not from a board, but literally from party bosses. In other words, the interference really is at a political level, that an IPO might actually be the first way of reforming the way the banks are structured and managed and putting them on really a more commercial footing. I mean, if that actually did happen without the requisite restructuring taking place prior to the IPO, do you think investors might buy into a listing of China's banks as almost as a restructuring play?
No, I think that they will be restructured to a certain extent before they're listed, even if they're contemplating listing in the short term on the international markets, because they just wouldn't be palatable at all in current form. And actually, the restructuring is going on, as we speak. It's like I said, it's a process going on. The big four is getting advice on sort of bringing their operations up to, say, international standards. So as we go forward, I think that these listings, when they do come, will be more palatable to the foreign investors.
And finally, for anybody who still has an eye on China, still is interested in mobilizing funds into this market, are all these IPOs as a whole palatable to you? I mean, there's so much momentum going with these debuts. It seems like you can make money on any of them, whether they're aviation, helicopters, insurance, whether it's textiles or whatever.
No, not all of the IPOs are palatable at all. It's always a pick and choose type of strategy because for a start we've had a plethora of H companies coming to list just in the last few months after post SARS, I mean. So we will be getting more over the next few months. Basically, investors, if they're playing the IPO game of punting and the momentum and the liquidity are strong, they're going to continue to do that. That's nothing, you can't stop that. But in terms of real investment, then yes, you've got to pick and choose.
Okay, we're going to wrap it up there. Philip, thank you very much for being with us here this morning. Philip Chan of Shenwan Securities. Heads up on our stock trading today on Morning Call. Marcus